Welcome to the latest edition of Fundamentals. This time around, I'm going to look at a fund that has only just launched this year, but has attracted plenty of attention, not least because of who's behind it, namely Woodford Income Focus. The fund's mandate is to provide sustainable income for advisors and clients over the long term, which is defined as a period of at least 3 to 5 years, and, in addition, provide modest income growth over time. Fund manager Neil Woodford, very well known from his long and successful period running equity income funds at Invesco Perpetual and now at his own company, will seek to provide this income by building a portfolio of quoted stocks with no geographic limits. The initial goal is to provide an income of 5 pence per share a year. The offer price was 100p, so the initial yield was 5%, although the net asset value per share of the fund has gone up to around the 104-105p mark since launch. The fund is the third launched by Mr. Woodford under his own name. The first two were the Woodford Patient Capital Investment Trust, where the mandate is to generate long-term capital growth by investing in quoted and unquoted fairly early stage growth companies, and also Woodford Equity Income. The latter should not be confused with Woodford Income Focus, which we're discussing here. Woodford Equity Income has a greater focus on total returns from capital gains and dividends, so it has a different mandate and a different portfolio as a result. For all that Woodford Income Focus has no geographic limits, the first ever portfolio update and fact sheet reveal a strong leaning towards the UK. Some 89% of the assets are invested domestically, with 6% in the US, 1% in Germany, and the other 4% in cash, as we can see here. By sector, the key overweights are financials, healthcare, technology and utilities, which represent around 60% of the portfolio. The key underweights were led telecoms, oil and gas and mining. Woodford Income Focus has no exposure here at all. In terms of stocks, Woodford's maintaining his personal drive for greater transparency in the fund management industry by listing not just the top 10 holdings in the fund on his website, but the entire portfolio. This currently comes to 50 stocks. The largest positions as of the end of April are UK pharmaceuticals giant AstraZeneca, FTSE 100 life insurer Legal & General, tobacco firm Imperial Brands, subprime lender and FTSE 100 member Provident Financial, and US listed drug developer AbbVie. Other top 10 holdings include Lloyds Bank and the British house builders Taylor Wimpey and Barratt Developments. The portfolio therefore clearly reflects Woodford's loudly stated view that analysts are too bearish about the UK economy, and that domestically focused sectors like financials, property and construction offer value, even as the broader UK market trades at pretty much all-time highs. Woodford Income Focus is eligible for SIPs, ISAs and dealing accounts, and comes with an ongoing charge figure of 0.75%. Advisors and clients can choose between income units, where the dividends are paid out, and accumulation units, where dividends are reinvested automatically. So, those are the mechanics. The question to address next is, why could advisors and clients consider this portfolio for inclusion, this fund for portfolio inclusion today? Well, I think there are 3 perfectly possible reasons. The first is the income on offer. That initial yield of around 5% will have caught the eye of many a patient long-term income seeker, whether they were looking to build their pot or indeed go into pension drawdown, for example. The second is Woodford's value-driven approach, where the focus is on capital preservation here as much as it is on generating positive long-term returns. And the third is, well, you may agree with Woodford's view that companies which derive the bulk of their business from the UK have been oversold amid broader fears over what Brexit might mean once it comes into effect in 2019, with or without a deal with the EU. Now, this is not to say Woodford Income Focus will suit every advisor or client's overall strategy, target returns, time horizon and appetite for risk. The targeted 5p a share dividend is that, it's a target and not a guarantee. The value of the fund could go down as well as up, despite all of Neil Woodford's best efforts. You may prefer capital growth to income, depending upon your personal circumstances or the client's and the advisor's circumstances, and advisors and clients may disagree with Mr. Woodford's relatively sanguine view of the UK's economic prospects on both a pre- and post-Brexit basis. Those are the questions to which only advisors and their clients can know the answers, and they should all do their own research before deciding whether to put any capital to work or not in this fund. Thank you for watching, and I look forward to seeing you next time.